Hey guys, Boris Lesser. Welcome to our Forex weekly technicals for 6:30, 7/04, 2014. Where the trades, it's been a kind of a crazy week in the markets in terms of the dollar. Dollar really getting surprisingly pounded this week. Let's take a look at the euro dollar chart first and foremost. Oops, I'm having a little bit of a difficulty grabbing it. Here we go. All right, let's rock and roll with the charts. You can see that the euro really found very decent support around 35.50 and has now just been climbing back above this towards this 36.50. This 36.50 level is pretty key because a takeout of this level and a close above it, I think sort of 36.50, 37, really negates a lot of this negative move. Pretty much confirms that this is a double bottom here at 3,500 and puts us back into a range trade with the euro. Having said this, though, I do think that this 36.50, 37 could be also a very interesting bargain sell point or evaluation sell point for a lot of longer term euro shorts. A lot of this is going to be very contingent on where we show up with the NFPs. Not necessarily even the jobs number on the NFPs, which of course has just been sort of steadied around 200,000. I think the key takeaway is going to be wage growth. If we don't see wage growth, the dollar gets really badly hurt. If we do see wage growth, then I think the euro comes back and tries to test the 3,500, 3,550, 3,500 in the next week. For now, though, this level over here, this 36.50, 37 level, definitely looks to be like a pretty decent top of the range sell as far as the trade goes. On dollar yen, on the other hand, you're really starting to see some very troubling moves to the downside. We still continue to hold, and this may very well be yet another example of this hold, this 101.50 to 175 level, which has been tested a couple times. Definitely been the base for the trade, but this is really a function of U.S. yields. It's really going to be a situation if U.S. yields break that 250 level, or worse, if we break the 240 level, which has really been the spike lows. Then you see dollar yen just trickling all the way down to 100, completely out of consensus trade. The big trade this year was that dollar yen was going to go to 110. And we're now seeing it much closer towards the 100. So it's kind of interesting how this is really turning into a disaster trade for a lot of people who are long dollars. Cable still looks very strong, but I think cable actually is kind of an interesting spec short, and I'll tell you why. Cable is notorious for making these big bursts up and then consolidating and trading back down. The latest communication out of BOE, even though the market took it as bullish, I actually thought it was relatively bearish in the sense that they did not make any promises to raise rates this year. Most of the macroprudential data that they put out has been essentially non-monetary in function, and therefore not really positive towards the currency. So there's actually like a little bit of potential here for cable to begin to fail at this 70.50 level. I think another day of no penetration beyond 70.50 creates a very strong possibility of a correction back down to 69.50, maybe even a more steeper correction towards the 68.50. And that leads me to, I think, another interesting trade, which is out of consensus, which is this. It's already starting to perform a lot better, but the cross that everybody loves to sell has suddenly found a very strong bottom here at around 79.50 level. And I think we've held this level for almost a month. This provides a pretty decent bargain hunting entry if you think we have a little bit of a short covering rally here. This is really a trade on weakness of cable correcting, not necessarily euro strength. But either way, I think this is another out of consensus trade that could be worth a look. You don't have too much risk. You basically have 50 points worth of risk here to the downside. But if it does trickle back up, the short squeeze could take us all the way to 81.50, perhaps even, 8100, perhaps even 81.50. So kind of worth watching because this long-term consolidation suggests that the downside is kind of exhausted for the time being. Aussie, also interesting look here. Aussie also finding, really trading well and trading well above this in this 93, 94 area, but also failing right over here. So it's going to be really interesting to see if we've reached kind of peak dollar negativity this week, or whether this is all going to be breakout levels, and we're going to go to much more different levels in all of the major crosses. So a breakout level here would take us 95 on Aussie, 171 on cable, maybe 37 on euro. This would be a kind of a dollar slaughter structure week. I find that hard to believe, but of course, we'll let the charts give us the clue. But for now, if you're trading top of the range, which has been the smart trade this whole year, these could be very interesting possible sell points. We also have obviously the RBA coming out this week, which could try to talk the currency down. And we have Chinese data, which could, although it was positive last week, could kind of negate if it comes in a little bit negative this week. A lot of this positive sentiment. So we gotta watch this very carefully. Technically this screams toppiness to me, and I'd like to be short rather than long at these levels. Kiwi is the last. Actually, no, I want to look at the cat too. But here's the Kiwi. Kiwi also, this 88, going to be very, very critical. Now we take out 88, it's all systems go, and you got to believe that, the momentum really takes us to 88.50 on a pure stop hunt move. But if we kind of stall out here as we did, and we can't seem to penetrate 88, another day to the downside, we could have more of a correction towards 8,700. Not much on the calendar for the Kiwi for next week, but it's just going to trade, I think, in sympathy with the rest of the calm dollars. And of course, everybody's talking about CAD, which generally means it's probably at the end of its run, but it's definitely had a very, very strong run. So the key thing, the reason why, again, I think this is a buy rather than a sell, is if you look at the year-to-date lows. This is where we are. 106 is a very, very key level for support, and you kind of have to believe that the risk here is to the upside rather than to the downside. CAD has been getting tremendous amount of play because of higher oil prices. Now, oil is of course a big unknown. If we spike out to 120 on WTI, yeah, of course, CAD could break the 106s. That's why it's a little bit of a dangerous trade. But if you step in front of here with a relatively small, let's say 105.50 stop, you may be able to catch pretty much the double bottom here, and that's why I think it's worth a shot as a spec trade. So it's kind of how the week shapes up. There's it looks very negative for the dollar, but it's also at the top of the ranges for the dollar. So depending on whether you want to trade breakout or whether you want to trade fake out, and of course fake out has been the much stronger story this year, is how you want to position yourselves for the week. Wishing you guys the best of luck and the best of trading. This is Boris Schlossberg for BK Forex, over and out.